Over the past year, there have been a lot of questions regarding the Home Mortgage Disclosure Act, or HMDA. And in this episode, we're going to answer some of your most frequently asked questions. On January 1st, 2018, the majority of the HMDA final rule became effective. Under the final rule, a credit union will now be subject to Regulation C if they originated at least 25 covered closed-end mortgages in each of the 2 preceding calendar years, or at least 500 covered opened-end lines of credit in each of the 2 preceding calendar years, in addition to meeting the other applicable coverage requirements. See the resource links below for more details. Now we will go over a few frequently asked questions regarding HMDA. Question 1. How can our credit union report the ethnicity and race information required under HMDA when the borrower is a business and not an individual? In this situation, you would report NA or not applicable on both data points because the borrower is a business entity and therefore cannot have a race or ethnicity. This is also true even if you know the race and ethnicity of the business owner or the guarantor of the loan. You do not report the race and ethnicity on these persons. The business is the borrower, thus you use not applicable. Question 2. Are business loans now reportable under HMDA? Business purpose loans and lines of credit are reportable, but only if they are secured by a dwelling, and only if they are home purchase loans, home improvement loans, or refinancings. Under the new rule, a dwelling is a residential structure whether or not attached to real property. If you are making a business purpose loan that's secured by one of these dwellings, you need to capture and report HMDA data. Question 3. Will our credit union be required to post new signage if we do not currently report HMDA? What about the Legal Entity Identifier, or LEI number? No, you do not have to post the sign if you are exempt from HMDA or until you are covered by the rule. The same goes for the LEI number. You do not need to obtain one until you are covered by the rule. However, if you are a HMDA reporter, you will need to have proper notice posted in your home office and the lobby of each branch containing the notice directing members to the CFPB website to review HMDA data. Question 4. Do we have to report all pre-approval requests now? What about pre-qualification requests? The collection, recording, and reporting of pre-approval requests that are approved but not accepted used to be optional under Regulation C. As of January 1st, 2018, covered institutions are now required to collect, record, and report information for approved but not accepted pre-approval requests for home purchase loans. Pre-approval requests for open-end lines of credit, reverse mortgages, and home purchase loans to be secured by multifamily dwellings are not covered transactions under the new rule. The appendix to the rule states that incomplete pre-approvals should not be reported. However, pre-qualification requests are treated differently under the rule. Regulation C does not require an institution to report pre-qualification requests on the HMDA loan application register, even though these requests may constitute applications under Regulation B for purposes of adverse action notices. But be careful that your credit union is using the terminology correctly and the pre-qualification is not actually a pre-approval under the rule. The important factors are whether a full credit underwriting with a commitment to lend takes place, or if the approval is an informal estimate of an amount for which an applicant might qualify. What the credit union calls the approval is not the controlling factor. Although we only covered a few questions on the subject, it's at least a start on getting a handle on HMDA. For more information, please see the provided resource links below or contact CCUL Compliance with any questions you may have.